Welcome to TradeTheNBI.com. This is John. This report is for the 17th. Well, we got a little bit of that softness right at the peak point there, just because the steel was starting to fade off. Now it's completely reset. We'll just to see if it breaks below the negative 13, which would indicate a little bit more of a continuation. And literally, we're just following ABM yellow, just perfectly in line with what you would typically see, though still bullish in general. It's just you've got no short-term buyers, and this is a surprise as we head towards the second half of the month. That usually is the weak point, and then positioning will start probably next week for the end of the month run. And we'll see what condition we're in. Again, Euro still trying to fight it down. The Fed still wants to push it up. It's going to be an interesting battle, because the reality is at this particular point, given the state of U.S. growth, and that there should be parity with the Euro, because 20% discount to their economic growth compared to our U.S. growth, definitely reasonable. And in this case, Treasury is still fighting this idea that they're just going to cut rates, continue to cut rates, which wouldn't be bad. It would just actually spur some growth. There's this new philosophy, sort of like I remember during Reagan, you had the Laffer curve, and now this new idea that you can have unlimited growth with no inflation. So, and therefore interest rates don't need to rise. So we'll see how that goes. USO, yeah, oil is, and this is what we talked about it. Inventory draws are not going to be strong enough because there's just this massive amount of output, which is, I think, where we tend to want to move towards precious metals and even cryptocurrencies, just because they're going to give a better read, I think, than oil will, where the limitation that oil had with OPEC and that has sort of faded, so you kind of lose that as a indication of whether the economy is thriving or not, except for, watching how much volume is being consumed. I thought I'd put up the 50K chart because I put up the buy signal that we were in, and then sure enough, of course, right after that, boom, gives a sell. And that's fine. It's going to happen. And a lot of times these will pop up right after it does that. Let's look at our graph. We're at equity highs for it, so that's pretty much where that one is. Let me shrink this down a little bit, because I don't think you can see the totality of it all. There we go. Can get everything in there that way. So decent from the profit factor standpoint. Periodic returns, been an unbelievable year for it. 63% gain. Not bad. I wouldn't swallow. And then a couple of these we knew better than to go with. I'm still working on trying to eliminate them. It's just some of the steps when you have the crossover in that. This is where that linkage of not having the reset of the steel, but moving into higher zones on P2 pivots, and that was the idea to kind of capture. It just is complicated from a rating standpoint. So once again, Deal Company 2, look at how clean this is. Boom, there. Produces the green with the rising. Just isn't enough to sustain it. And of course, without the steel reset, you know that these pops not likely to survive. Once it goes above that 13.5, usually I look for the first breakdown below the 7.5, because that's usually where the softness begins. And sure enough, as soon as it happens again, that leads to the retrace back to the lows. And we're pretty much kind of exactly where we were for the signal. It's right in the same 3,000 range. And we figured when we got to about 30.20, 30.22, I think is what I actually said. What did we get for a high? 21.75. I missed it by one tick. Apologize for that. Try better next time. After all, we were only talking about hundreds of point move and missed it by a tick. Oh well. As always, if there's anything new, I'll put it up on the Skype chat. Trade well. We'll talk again later.